the best credit options for you. Whether it is a traditional way of borrowing via personal loans, gold loans, or rather via credit card when you're borrowing money, or whether should someone take the buy now pay later scheme, which is gathering momentum, but what is beneficial in any given particular situation. So let's get started, and today we are being joined by Mrin Agarwal for this one, and she is the founder of Finsafe India and a licensed financial advisor and financial coach. Welcome to ET Now, Mrin, and thank you so much for your time. Firstly, so like I was mentioning, that there are so many options of borrowing money from the market, and I want to discuss each one of them individually and get your insight. How do you look at it? What is beneficial for the viewers itself? And then we would like to have a comparison in between these, all of these. So first, let's take up the gold loans. Help us understand what are the pros and cons in this one, and what I mean here is that what benefits do you take that gold loans will provide when someone is in a time of need of money?
Good evening, Christy. Nice to be here on the show today. So as far as gold loan is concerned, I think the biggest advantage of the gold loan is that it comes at a much cheaper cost than most of the other loans. And that is because it is collateral based. There is a collateral, which is the gold obviously attached to it. It's very easy to get the loan. You only need the KYC documents. You get a good LTV, which is the percentage of loan that you get, can be up to 90% of the value of the gold. And the other good thing in the gold loan is that you can decide, you can choose the option whether you want to pay it as an EMI or you just want to pay the interest at the end of the loan tenor, right? I see many other pros, like for example, you can put your idle gold to use. So a lot of times people tend to take personal loans because they feel that that's easily available. But the point is that they're much more expensive. And when you have gold lying around in the house, you might as well put it to some use as well. And of course, you can also take some large value amounts as well. You can take up to 1 crore in a gold loan.
Okay, so these were some of the points that that are beneficial for anyone who is looking forward to take up a gold loan, where the interest rate is a bit low and you can opt for around 90% of the loan value. And now let's talk about personal loans, Mrin. What do you think it is appropriate to take one? What time should one be thinking of this one when we have other options available? And what are the pros and cons in this particular option of borrowing money?
Well, personal loans also are very easily available. What I mean by easily available is that you don't need a collateral. The processing time is very quick, and you also have flexible terms that are available. But I think the things that you really need to watch out for in a personal loan is the fact that the interest costs in these are pretty high. So right now the costs have come down. You're looking at like 10 to 12%. But not only the interest cost, these also come with high processing fees. So you're looking at processing fees between 1 to 2.5%. Of course, the personal loan rate is going to be totally dependent upon your credit score. And there's a strict eligibility criteria, obviously, because there's no collateral out here. Now, the other thing that you also need to keep in mind is that some of the personal loans come with very strict early repayment penalties. So if you want to pay off earlier, there's going to be a penalty that's going to charge, and that could be between 2 to 5% on the principal amount that is actually due, right? So these are some of the things to keep in mind. And I mean, as such, I would say that you go in for a personal loan only if you don't have the option to take collateral based loans. In collateral based loans, you also have loan against fixed deposits, right? So I would say that you go for a personal loan only if you really need it. There's some sort of emergency and you need a loan for a short period of time and you don't have any other options, then you can do the personal loan.
Okay, so Mrin, so many characteristics that you highlighted in for personal loans, like high interest rates, you need the money for the shorter period of time. It is similar to what credit cards also offer. there where the high interest rates, the interest rates are high, and even I hear a lot of cases where the people actually don't know how much interest are they incurring on the late payments for their credit card dues, and because of that there is a burden on them. I want to understand that it is being used in regular transactions now, and millennials are using it very frequently. What are the pros and cons in this ones, and should one really be using in the case of emergencies? Because what I understand is that many people are now using it for their EMI purposes, for say. But what about emergencies fund? Is that a good option?
Not really. I don't recommend usage of credit card for emergencies. Ideally, you should create an emergency fund that is easily accessible. The reason being that with a credit card, there is an interest cost if you don't pay back on time. And this is what we are seeing a lot, that people use it in two cases. One, of course, regular usage, but then people also use it on impulse a lot, like, for example, paying for vacations and stuff like that. And then people use it for emergencies. And the problem with this is that if you're not going to be able to pay the bill on time, then there's going to be a huge interest cost of 36%. Of course, it's going to impact your credit score. So when you really want to borrow for something else, you may not be able to get the loan. And sometimes I also find that continued usage of credit cards in difficult situations makes you very lazy. Like, people do not look at, okay, what are the other cheaper options that I have available. Like, if you ask me today, everybody has gold, and there is some gold that you can always pledge and take a loan, rather than going in for a 36% credit card loan, right? So I don't really think that you should use credit cards in emergencies. Use it only if you can actually pay that, that you can pay the money back on time.
Absolutely. But Mrin, another, what I would not say is that a traditional way of borrowing money and recently has gained momentum is the buy now, pay later scheme. It is gaining a lot of popularity, and so many people are actually going and opting for the same. I want you to help our viewer understand that what exactly it is, why it is gaining so much of momentum, what is there that it is getting attracting to them, and also what is that aspect that they should be really aware of while they're opting for this particular scheme.
So the thing with BNPL is that, of course, again, the processing is super duper quick. I mean, when you're buying stuff online or during the checkout itself, you can opt for the BNPL, right? And BNPL does not look at your credit score, because the way it works is that for whatever you're purchasing, you have to pay it back within, let's say, 3 or 4 installments. So they're not checking your credit score. There's no interest on it, right? So if you swipe your card and you're not able to pay back on time, there is going to be interest. But over here, as long as you pay back on time, it's going to be a interest free for you. And because of the fast and easy setup and approval, it does provide a lot of convenience. But the main thing to again remember is that the product is good as long as you're able to pay back on time. Because if you're not able to pay back on time, the interest cost and the late payment charges is going to be pretty steep. It could be anywhere in the range of about 4 to 6%. Many times what happens is that these costs are put as, let's say, 200 rupees for loans below 10,000. And so people feel, okay, what is 200 bucks? It's not a big deal. I can easily afford it, right? But the other thing is that if you keep, if you're not paying back on time, then again, the problem is that you get attuned to this way of borrowing for everything that you want to spend on. And certainly, the advent of BNPL has meant that people are getting more into this. It does encourage impulse spending a lot more, right? So even if you feel you don't need something, or even if you cannot really afford it, because of the BNPL, you would actually go ahead and buy it. So it does not really promote very good credit behavior, so as to speak, because typically most people get very, very attached to it, and they just get used to buying everything on BNPL. And then, of course, if you keep rolling over and you don't pay back on time, while right now it's not being tracked by the credit agencies, I do think that there will be a time where it is going to come under the purview of the credit agencies as well. So in that case, it will affect your credit score. And that's the point with all of these loans, right? So as long as you can pay it back on time, it's fine. But the moment you cannot pay it back on time, that's where the problem starts.
So, viewers, it's very important that what all points Mrin had just highlighted, that if you're opting for buy now, pay later scheme, then just do watchful of the conditions and do watchful that you do make payments back on time, because a lot of things are at stake, not just the high interest cost, but also your credit score can get impacted. But now let's Mrin talk about that we have and we know that what are the pros and cons of the various options that are available, that is credit cards, personal loan, or rather gold loans. And you were some time back highlighting about the emergency fund, that one should really be having that for the emergency purpose. But what if somebody is not having a contingency fund or rather an insurance? In the three options that are available, I'm keeping aside that buy now pay later scheme, from credit card, gold loans and personal loan, what should be the first one that in the case of emergency one should be going with that?
Well, I think the gold loan is a good option because it's cheaper. And that's because there's a collateral and you're utilizing your idle gold as well. So I would go with the gold loan simply because it's cheaper.
Okay, and then what's next? Like, if gold loan is there, then what should be the next one on the radar? Like personal loans or credit card? Just for our
It would
viewers
be
that
personal loan.
they know
Yeah.
a hierarchy of options that are available.
Yeah, so it would be gold loan because again, I would say that the processing time among all of these, it's not all that different. You can also get a gold loan very quickly. So given that the processing times are pretty much similar, I would say gold loan followed by personal loan followed by credit card, and that's completely based on the interest rate that's being charged for each one of these loans.
Okay. Okay, Mrin, thanks so much for that. And lastly, I would like to have your take on what are the rules that one must follow with respect to taking on a debt. With high interest rates loans, it's easy to get trapped, right? And how can one avoid getting into that debt trap? What are your views on this?
So the first thing is that always limit the amount of loans or the EMIs that you're paying to 30% of your take home. So if you're already at that 30% number, then it's a big red flag and you know that you should not be taking more loans, right? So always limit your borrowings to 30% and keep your EMIs to 30% of your take home. Also take loans only if they're really essential, right? So I'll give you a small example, right? So maybe you've gone to buy a TV and you can afford, let's say, a 50-inch TV, but then you go to the store and you like the 75-inch TV, and there's a nice scheme out there. A lot of people just fall for that and end up doing it, right? So think about it. Please take a loan only if it's really essential. And also, in case of emergencies, I would really like to say this, that can you look at breaking an FD instead of taking a loan, for example? Like, do you have investments which are liquid that can be broken if it's just, for a short period, just to cover up some emergency? I also find people taking a lot of loans for tax purposes, especially this is true for home loans. And many a time, I also find that people keep their home loans live because of tax purposes. So, end of the day, when you're paying an interest, you're always paying a higher amount. And so, there's no point in keeping the loan live just for tax purposes. Of course, some hygiene factors that you need to keep in mind. Don't go to too many lenders for the loan because that will reduce your credit score. Check the charges. By charges, I mean the processing charges, the interest cost, and of course, what are the prepayment or the foreclosure penalties. Many times you have these teaser loans that come out, or these special loans that come out during festivals. Read the terms and conditions, because it could be that the lower rate is charged for a specific period, and then
Yes,
after that period it could be a higher rate. And of course, take insurance cover for high value loans. and
absolutely.
and what is the impact of the loans on your well-being? So are you happy having so many loans or not? I think that's a very important factor that you need to think of as well.
Absolutely, Mrin, because all of these points our viewers should be keeping on mind, that whether or not you want to take a loan, there are other options that are available that you should be first looking into and then go for the loans. And we already gave you the options that are available and the hierarchy of that. Thank you so much, Mrin, for joining us on ET Now and having this interesting conversation with us.